All right, guys, we got a lot of ground to cover today. So today we're going to be going over Disney and the earnings trade possibility here. After today's close, they report their financials for the quarter, and the numbers look really optimal. And I'm going to show you guys step by step on how I'm coming to that conclusion, so that way you guys can apply this real time when you're looking at trades. And on top of all that, we're going to go through risk mitigation, a couple strategies. So first and foremost, just want to go over this the skew series. We're going to be bringing back the skew series in a minute, probably later this week. The reason that we're doing Disney today is because this trade just looks that optimal. The optics on this trade look that good. So Disney reports their earnings after the close today on November 8th. A couple things, big takeaways right off the gate, guys. You guys know these are probably my two favorite metrics, and we have an implied move versus an average implied move of 1.51, an implied move versus an average move of 2.5. 2.5. This is a ridiculous level of like this particular ratio for a company this big. You really do not see this that often. If you do see it, you probably see in the past year on companies that are extremely volatile right now. I mean, we're talking about Netflix and Roku and DocuSign and Teladoc and Peloton and Snapchat and Meta and things like that. This is not a Meta. This is not even a Netflix, even though they're similar, right? I think I'm gonna get into this into a sec, but I think the big reason we're seeing this is kind of something related to Netflix, but this isn't Netflix or Meta or anything at its core. This is Disney. This isn't just and like a titan in the United States economy. This is in the Dow, right? Like those other companies came and touched the SPX, some of them. So this is a true slow moving stock. It's not exceptionally volatile. Little backdrop on it. I mean, we've obviously seen sell-offs in the market. For every given stock basically for the past year, and Disney's no exception to that. But you don't see Disney having a minus 20% day, like you have with Netflix, like you have with Roku, like you have with Teladoc and Peloton and Snapchat and all these companies. You don't see that with Disney. So just on the surface, this looks great. But let's look at it a little bit deeper. So the implied move, like I said, yields a ratio of 2.5, right? Implied move of 7.4, average of 2.95. The max realized move is 8.8%. So out of all these past quarters, right? The biggest move that we have seen is 8.8%. It is 8.8%, happened back in the COVID craze, right? This is an extremely intriguing indicator. Now, lastly, what we need to look at here is the Stroud performance. It doesn't get much better than that. Just a consistent loser to be on, and not just being a consistent loser, a consistent big loser. These Stroud returns going into earnings, I mean, a large portion of the time, yield returns of negative 30%. I mean, that's a pretty big day for selling earnings on. A 30% return on anything is extremely nice. So, with that being said, again, we can just validate everything with the bell curve. Looks optimal, looks great, right? Taking into relative value, apply IV30 versus non-event IV30. Just make sure that this isn't like, cheap relative to historical periods. Nope, not cheap at all. Looks great. Looks great. Everything on this looks excellent. All right. So now the question we need to ask ourselves is, okay, why is this here? Why is this here entirely at all? Right. I've made the case about business in the Dow. It's not really a big moving stock. We've seen the markets bounce back a little bit. Why is there so much risk here? Right. Why is that? Why is the market expecting such a big move? Why have we seen this on the implied move time series since October 31st? Well, this is where fundamental analysis and fundamental research comes in. Now, I'm not perfect at this, and I don't think really anyone's perfect at this, trying to figure out exactly what is driving IV higher, right? You can have your big, broad case things, but then you can talk to somebody else, and he's like, no, it's this, right? It's really all subjective, right? It's really all subjective, unless it's like clear cut, like, you know, a stock is a company's getting bought out, right? At $30 a share, and the stock jumped from $20 a share to $30 a share. Okay, it's pretty obvious then. Sometimes it's a little bit harder. My thesis is that we've seen a lot of hype around Disney for the past week or so heading into their earnings. Last quarter, basically, they passed Netflix as the top streamer. That's basically Wall Street's opinion on it, and they're expecting that gap to widen. Right? They're expecting Disney Plus to continue to build, and that's why I was making that comparison earlier to Disney to Netflix because I think this could be a big reason why. But notice how I'm saying they expect the gap to widen, as in like they expect Disney to continue to be better. I think that this is excitement. I don't really think this is not fear and uncertainty. I really think it's excitement. So the risk would be they completely miss, and they don't continue to widen that gap with Netflix. And then everyone goes, kind of thinks to themselves, oh, well, I guess Disney isn't that good. Well, I need to adjust my forecast now. And then people sell off. Something along those lines. But I think, yes, a large portion of this is just overall excitement centered around Disney Plus streaming. There's a couple other things going on. Some people are saying that we're going to see, better numbers this quarter for theme parks and things like that. I think you will probably, just because it's summer, it was summertime, coupled with the fact, like late summer, early fall, Labor Day, so to speak, all that kind of stuff. So I could see something like that, but at the end of the day, guys, that's all known. It's pretty much known information. So I really think that this is just a lot of excitement, centered around Disney Plus streaming and looking at, comparison that I can see people trying to make here, which is centered around, oh, well, Disney Plus, this quarter is implying a move of 7.62%. And all these streaming companies have been really volatile. So if the news is centered around streaming services, and it's been centered around streaming services for the past couple of quarters with Disney, it makes sense that has a high implied move. And I'd be like, yeah, I agree. But then roll me that. This was on August 10th. It's the last quarter. Had an implied move of 5.8%. This quarter, we have an implied move of almost 8%. So I don't entirely think that. I really think that this is Disney specific, which is the exact type of trade that I would like. It kind of reminds me a lot of Apple with a new product release. That is the way I would compare it to. So structuring the trade, guys. Two ways to do it. I looked at skew. I didn't really see any skew based trades there. So we're just going to keep it clear cut. What we can see here is we got the weekly options on. You guys know what it is. Got the vol forecast in here on the right side. Expected Ivy Crush, by the way, guys, just for reference, is around 26%. But I think, the reason I always take that up a bit because usually, it's not going to get all the way down right at the open tomorrow. So looking at this real quick, we can see that our break evens are going to be $109, give or take, to the upside and around $93 to the downside. One standard deviation. Iron Condor is looking pretty optimal as well, believe it or not. But the break evens obviously are a lot tighter. But the implied move is so much larger than the average move that honestly, Iron Condors may not be a bad trade here. But it's all relative to your risk tolerance. That is the portion of the analysis that you have to do. I'm just the messenger. So we have break even here of 95.5 cents to the downside on the back end of the Condor, and break even to the upside around $106 and a half, 106.5 dollars. So with that being said, risk reward here, if this were to pin, hold the expiration, you get $564 and you're only risking 236. Obviously, the reason that the pin risk reward is so good is because the market's basically saying it's probably not likely that that's going to happen. Straddle, obviously, guys, again, max you're going to make here is around $820 if you hold the expiration. But overall, if we just plug in, the average, like the max move, right? The historical average move and the max move. I'll actually show you guys how to do this. It's really not hard. So you take the average move, right? So our average move here is 2.95%, right? So if our average move is 2.95% and the stock is trading for $101.33, then you would just take 101.33 and you would multiply it by 0.0295, right? And that would give you around $3, like $2.98. So if it's at 103.25, we're going to be at 104 0.23, right? So this is a really neat trick, always to price this out and things are swing pretty fast. The only reason I bring this up is because I know we have newer traders and sometimes they're like, oh, I don't know how to price this out. So thought I would show you guys that and get you and give you guys a good look. So on the straddle, if we just realize the average move, I mean, you might be in line to clear over 100, 400 buck P&L per bet. Like that, like this trade just like it just doesn't. It's ridiculous. Um, Yeah, I mean, like it's trades like this, they really don't come that often. So, I again, when you're looking at fundamental analysis, sometimes you're really, it depends on what you're looking at. Are you looking for an answer? Because really, what I'm looking for with fundamental analysis is more or less so making sure there's nothing that I'm betting against that I don't want to be betting against, right? Like if Disney is set to announce like a ton of staff realignments, I may not want to make a bet against that because I have no idea about their staff, right? But if it's about, Disney Plus and product release and things like that, that is something that I might want to consider doing. So, again, looks really optimal, guys. Thought you'd really enjoy this one. I'll see you guys in the next one. Take care. Peace.